Hi friends, we are starting a face-to-face offline batch in Bangalore with SS Academy. That is for CA Final Financial Reporting paper number 1. Yeah, we'll be taking exactly 2 months from 1st November to 31st December. We'll complete it. It is starting from 1st November 2022. Yes, and in Jayanagara branch of SS Academy, we have morning batch and evening batch will be at Seshadripuram SS Academy. Right, and if the student is missing because of any reasons, right, they are going to get a backup class. All right, we'll ensure that their things, they will study and complete, and from the face to face batch, the benefits out of it. We'll be completing the syllabus in time. You don't need to postpone and you don't need to compromise for your goals. See you in the class. Please share this information to your friends. That will help me and as well. Thank you. Next, for my books, that is an Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikanthmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from my book, that is Quick Revision Fast Track Charts on Financial Reporting, which is available in the market. Let's look at Ind AS 38, which is intangible assets. Yeah, this standard is obviously not applicable for the intangible asset which is covered by some other standard. Suppose if there is a goodwill arising from business combination, one needs to refer Ind AS 103. Right, like that ROUA, yes, this right of using right to use your asset, correct? Yeah, that is dealt by Ind AS 116. Like that, if it is dealt by other standard, then you are supposed to refer the respective standard. And it is not applicable for the financial assets which are dealt by 109, and exploration and mineral rights, and that also obviously this is not applicable. You need to refer either Ind AS 106 or industry standards. What is intangible asset? Intangible asset is an identifiable non-monetary asset without physical substance. Identifiable is one word, non-monetary is second, asset is third, and without physical substance. Yeah, when you see identifiability, it should be, it should be separable. That means separately you will be able to sell it, you will be able to barter it, you will be able to rent it, you will be able to use it. But this separability should be separable from the goodwill. That is first point. But this separability rule is not mandatory when this right is arising from the contractual right or legal right. Then this rule you don't need to follow. What is non-monetary? Which is not monetary? What is monetary? Money held and assets or liabilities which are receivable or payable in terms of money but not money's worth. Right, then that is something which is receivable or payable in terms of money, that is monetary. But intangible asset is a right which we are holding. It is not something receivable or payable in terms of money. And asset, that is very important. See, if it is a physical asset, you can prove it is my asset, it is in my name or something. It is intangible, the entity should be having the control over it. If you can say control we have, then it is your asset without physical substance. Yeah, you have to consider, is that intangible has the more value or the tangible has the more value? You have to take a judgment. Right, if there is a software and hardware both are mixed in one item, then you have to decide based on which is significant, which is predominant. If you say software is predominant, then entire asset is going to be treated as intangible asset. If it is hardware is predominant, then entire asset is going to be treated as PPE. Here bifurcation and accounting, no, it is not permitted by the standard. These are all the following examples. Say example, prototype. Prototype is an outcome of the knowledge, right? Even though you see physically, no, it is not. Ravivarma's painting. It is an art. You are not paying for the canvas or the painting cost. You are paying for the art in it, which is an intangible. When you see the recognition and measurement, yeah, I'll say initial recognition, subsequent measurement. Initial recognition, that is, it is the recognition on the date of acquisition, or when you first time when you acquire the asset, how do you recognize it? It is supposed to be recognized at cost. It is supposed to be recognized at cost. Subsequent recognition, there are subparts. That is, one is on the balance sheet date, or subsequently if you have incurred any expenditure on already recognized intangible asset. Yeah. So initial recognition, you can acquire the intangible asset. You can be the owner of the intangible asset by four ways. One is cash or credit method. Next one is barter method. Next one is acquisition. I mean, as part of the business combination, or self construction. That is self generation of the intangible asset is that is the third one, fourth one, or by government grant. Yeah, before going to self creation of intangible asset, let us look at this. If it is, I mean, if you have purchased it, if you have acquired it by way of cash or credit, yes, we can have a look at, that is purchase price, brokerage, non refundable taxes, any professional fees, and any installation software, such kind of thing, installation fees, all directly attributable expenditure to purchase it, minus if there is any discount or rebate and any government grant, you can reduce it. Barter system, this is exactly same as Ind AS 16. Then as we discussed already, not repeating. Yes. Next, when you have acquired as part of business combination, intangible asset has been acquired as part of business combination. Yes. See, when it is acquired and business combination, it has to be recognized at the fair market value on the date of acquisition. This is as per Ind AS 103. Yeah, you should never take it at cost. Yeah, they may try to confuse you by saying the cost is, I mean, fair market value cannot be measured reliably, there are so many probabilities. If there are so many probabilities, then one has to apply probability weighted average, and you have to find out fair value. There is no way other than fair market value. Even if you purchase R&D must have, I mean, research phase. If the acquiree is doing some research, acquirer purchaser the same thing when it is in research phase. Since we have paid money for it, right, so then it is supposed to be recognized at the same money. I mean, at fair market value, at what amount you have paid, basically that will be the rate you will be recognizing. If it is part of government grant, if it is part of government grant if it is received as part of government grant, it is nothing but non-monetary government grant is received. That's why you have two options that is discussed as per Ind AS 20, that it can be recognized at fair market value, or it can be recognized at nominal value, whichever. Right. And the third one, I mean, last one, I say self construction. Yeah, self generation of an intangible asset. Then we divide this into two phases. One is research phase, the next one is development phase. Right. What is this self generation? Yeah, so research phase, whatever the expenses you have incurred, that is all supposed to be charged to profit and loss, because you don't know whether it's going to be successful, whether you are going to make money or not. Even though research is completed during the year, till the last minute of the research, you are supposed to charge it to profit and loss, even though research is successful at the end of the day. I mean, during the current year itself also, right? And which is development phase expenditure. Yeah, development phase expenses. What do? You can capitalize it as intangible asset under development, but subject to six criteria. One, there should be, see, end of the day, these six conditions are actually trying to prove the two conditions of asset, that is probable future economic benefits inflows, and can it be measured, cost or value can be measured reliably. That's all. So to say that, I mean, I have got the knowledge, I mean, I'm started developing it, is it technically possible, feasible to complete? Do I have intention to complete? Do I have support, that is financial support, human resource, technical support, any support? Is it possible to get the future economic benefits either by using it or selling it or by renting it? Correct. Whether the entity is able to use this or not, and can we measure the cost? So when you satisfy the six criteria, then intangible asset under development will become one asset, right? Till the date we are able to, development phase is completed, it will be under the head intangible asset and development. Once development is completed, then it will be transferred to intangible asset account, like CWIP account to PP, how you transfer, I mean, CWP account say you will transfer it to PP, in the same fashion you will be transferring it, right? But these 6 criteria are supposed to be tested at the end of every balance sheet. I mean, on every balance sheet date you are supposed to check it. On any balance sheet date, not only balance sheet, any balance sheet date, any balance sheet, even that need not be at the year end, even at the quarter end also, if it does not satisfy the conditions, then it is supposed to be charged to P&L. That is not only that year expenditure, so far whatever you have incurred, entire expenditure is supposed to be charged to P&L. Once it is charged to P&L, it will not be reversed. Once it is charged, it will never be reversed, right? And if you are not in a position to distinguish whether it is a development expenditure or research expenditure, treat it as a research expenditure and transfer it to profit and loss. The following are the expenditure which will be part of the development expenditure, which do include exclude, which include, that is the cost of material, services, I mean employee salaries, wages, any expenditure directly attributable to development. I mean, I spent something, if I had not taken up the development, I would have not incurred. Then it is a development expenditure, including borrowing cost. If you have taken any loan for the purpose of development, yes, that is a qualifying asset as per Ind AS 23. Exclude, that is selling and distribution overhead, general administration and abnormal loss, training cost, operating losses will never be part and parcel of the intangible asset under development. Yeah, subsequent measurement. When I say subsequent measurement, that means you have incurred subsequently on the same intangible asset, you spend some more money. The simple question, when you have incurred some more money, question, does it, that extra money you spend, does it satisfy the intangible asset definition and satisfies the two conditions of asset, that is probable future economic benefits inflow, cost or value can be measured reliably. If you say future economic benefits will flow, I spent today, money is going to flow to me after some time, then that amount will be capitalized. Otherwise, no, it will be charged to profit and loss, right? If it is on the balance sheet date, as usual, like it is same as in day 16, we have two options for each class of intangible assets. For each class of intangible asset, you can say all patents are one class. Okay, different classes, I mean rights, I mean copyrights are different, licenses can be different, software license, software is different, like this. For each class you can follow either cost model or revaluation model, right? It is, the accounting is exactly same as in days 16. We don't need to do any changes except few cases. If you are following revaluation model, I mean, you can apply the revaluation model only when such intangible assets has active market. If there is no, I mean, say example, in one class of intangible assets there are 10, out of 10 two assets does not have active market, no problem. For the entire class of intangible assets you can follow revaluation, except these two you can follow cost model, which is permitted by the standard. Suppose there few assets had active market initially, that's why I followed revaluation model. Subsequently we lost the active market, nobody is buying, nobody is selling such intangible asset right now, no problem. Whatever is the book value so far, I mean on the date you are not getting the active market, that book value only you continue, I mean prospectively you depreciate it. That is the matter, right? We are getting into the almost last topic, which is amortization. What is amortization? Amortization, depreciation, both are one and the same. That is systematic allocation of depreciable amount over the useful life of the asset. Yeah, here the major things are two things. One is method of amortization, next is the period, right? That is life of the asset. Method of amortization, right, it is same as in day 16. Once again, the method which you select should reflect the pattern of consumption of future economic benefits. In, I mean, future economic benefits consumption, but is not exactly sales ratio. Sales ratio will be, sales ratio will have the impact of the market factors, but consumption ratio is what something you are supposed to follow. Yeah, depreciable amount means cost or revalued amount minus residual value is depreciable amount. Period, right? Some intangibles may be having indefinite life, some intangibles may be having definite life. right? Let's look at, if it is indefinite life, then obviously there is no depreciation, but such intangible assets has to be tested for impairment at every year end. Yeah, not only this, if it is an intangible asset under development also, that also has to be tested for impairment, and every year end you are supposed to test for impairment. If the intangible asset has definite life, yes, amortize it over its useful life, right? And there is no limitation on number of years, like accounting standard 26 has rebuttable assumption 10 years. Intangible asset cannot have a life of more than 10 years. No such rebuttable assumption with respect to Ind AS 38. And you have to review the life, method, residual value of the intangible at every year end. If there is any significant variance, then you are supposed to follow prospective, that is remaining book value over the remaining life in the new method, considering the new life, considering the new residual value. You are supposed to do it, right? Retirement disposal, which is exactly same as in day 16, right? In case it is getting disposed or it is getting retired, the difference, I mean, the gain or loss is supposed to be transferred to profit and loss. Gain or loss is equal to the sale proceeds as per Ind AS 115 minus, right, minus the book value of the asset, that will be transferred to profit and loss. It will never be adjusted with the revaluation reserve or capital reserve, nothing. It will hit the profit and loss all the time. And first adoption of Ind AS also is exactly same as Ind AS 16, right? That's it, my dear. If you like this video and if you feel it is helpful to your friends, please share it, like the video and comment for my encouragement. And thank you very much. Wish you all the very best.